When trading in the financial markets, traders buy and sell assets in two different ways: going long or going short. Going long is the industry term used to describe buying an asset. Going short is the industry term used to describe selling an asset. Going short is the industry term. Traders go long because they believe the market price will rise. They go short because they expect the market price to fall. In Forex and other financial markets, traders can profit by buying low and selling high.
For example, if a trader goes short on EUR/USD, they expect the euro to lose value. The order of buying and selling does not matter. Profit depends on correctly predicting market direction. If traders buy low and sell even lower, or sell high and buy even higher, they will incur a loss.
Forex and CFD trading involves substantial risk. It may not be suitable for every investor. Never trade with money you cannot afford to lose.
Please like and subscribe.